Thank you very much for participating despite your busy schedule. We'd like to start the fiscal year 2023 first quarter financial results briefing of NYK. I am the MC today, Okada, Head of IR. Thank you very much. First of all, I would like to introduce today's attendant. We have the Vice President CFO, Mr. Kono, Representative Director, and the Managing Executive Officer, Planning Logistics Business Head, Mr. Banno. Today, from Mr. Kono, we will have a presentation about the first quarter results briefing for fiscal 2023. After that, we will have the question and answer session. I would like to explain how to ask questions afterwards. The presentation material will be on our website. Please download that according to your necessity. Including the Q&A session, this presentation will be shown on on-demand streaming. Please understand. Let us start the presentation. Mr. Kono, please. So as of 1st of April, I assumed the position of CFO. I am Kono of NYK. Thank you very much for taking time out of your busy schedule to attend this briefing today. Today, I will first provide an overview for the first quarter financial results for fiscal year 2023, followed by an explanation of the full year earnings forecast for fiscal year 2023. After that, we will have time for questions and answers. The presentation materials will be projected on the screen you're looking at, or if you have downloaded them from our website, please have them ready at hand. First, I would like to give you an overview of the first quarter results for fiscal year 2023. Please refer to the table on page 6. The second blue column from the right shows the results for the first quarter of fiscal year 2023. Revenue decreased by 105.5 billion yen year-on-year to 567.5 billion yen. Recurring profit decreased by 288.3 billion yen year-on-year to 89.4 billion yen. And net income decreased by 269.8 billion yen year-on-year to 73.4 billion yen. Both revenues and profits decreased. The main reasons behind this is that the liner and logistics segment, which consists of ONE, air cargo transportation and logistics, which had been strong in the same period of the previous year, saw a decline in freight rates and handling volumes due to the easing of supply demand as a result of the resolution of supply chain disruptions. Both revenue and segment profit declined. The dry bulk market also declined compared to the high market situation in the same period of the previous year. Please see the table on page 7 for comparison by segments. Here too, the second blue column from the right shows the first quarter results. The recurring profit loss of liner and logistics business, which consists of liner trade, air cargo transportation, logistics, for instance, for liner, showed a year-on-year decrease of 238.5 billion yen to 31.6 billion yen. For air cargo transportation, a year-on-year decrease of 24.1 billion yen to 0.4 billion yen. For logistics, a year-on-year decrease of 12.2 billion to 7 billion yen. Each of the businesses were affected by the decline in transportation demand, which became pronounced from the fourth quarter of the last fiscal year and onward. In the liner trade business in ONE, profit level fell due to a decline in spot freight rates caused by an easing of supply demand, which also affected contract renewals. In the air cargo transportation business, freight rate levels fell due to a decrease in cargo movement and an increase in supply space resulting from a recovery in the international passenger traffic, which caused the supply demand to ease. In the logistics business, the logistics division performed well, but as explained earlier, the ocean freight and air freight handling business were affected by the liner trade and international air freight markets, resulting in a decline in profit levels. As a result, the liner and logistics segment as a whole, recurring profit was 39.1 billion yen, down 275 billion yen from the same period last year. The bulk shipping business posted recurring profit of 53.7 billion, down 10 billion yen from the same period last year. In the dry bulk carrier business, although efforts were made to reduce the risk of market fluctuation through futures trading and other means, market conditions for each type of vessels were worse than in the same period of the previous year due to the delayed recovery of the Chinese economy and other factors. On the other hand, in the automotive transportation business, the supply-demand balance remained tight due to strong transportation demand since the second half of the previous fiscal year. And as a result of the efforts to optimize vessel allocation and improve operating rates, the number of units transported increased compared to previous year. In the energy business, LNG and offshore business remained steady, supported by long-term contracts, and market conditions for VLCCs and VLGCs improved significantly from the same period of the previous year. Please turn back to page 3 of the document. Again, overall recurring profit decreased by 288.3 billion yen year-on-year to 89.4 billion yen. And net income decreased by 269.8 billion yen year-on-year to 73.4 billion yen after adjusting for extraordinary losses and taxes and other items. Next, please refer to page 8. As shown in the table on the left, the 288.3 billion yen decrease in recurring profit compared to the same period last year was largely due to the fluctuations in the shipping market, particularly in the liner trade segment. This has been the summary of the financial results for the first quarter of FY2023.
Next, I would like to explain the full year forecast for this fiscal year, FY2023. Please refer to page 9. With regards to full year forecast for FY2023, these figures are versus the forecast announced in May at the time of the full year results briefing. The revenue rate was revised down by 130 billion yen to 2,170 billion yen, and recurring profit and net income were both revised up by 20 billion to 220 billion yen. I will cover the details of each segment later. Versus the previous forecast, liners and logistics segment was impacted by the sluggish market, and the forecast was revised down by 19.5 billion yen. In bulk shipping segment, there was a benefit from a strong performance of automotive transportation business and VLCC VLGC market, which led to forecast revision of 39.5 billion yen. On page 12, you can find the profit at each level and exchange rate assumptions, as well as bunker prices. The dividend forecast, in accordance of the payout ratio guidance of 30%, led to upward revision by 10 yen of the dividend, which is 130 yen annually. 60 yen per share for interim dividend and 70 yen per share for year-end dividend. In addition, as we have explained in the medium-term management plan, it has been decided to acquire treasury stock of up to 200 billion yen during the period of August 4th in 2023 and April 30th of 2024. In the Board of Directors meeting held today, this was resolved. The acquired treasury stocks will all be retired, and the dividend forecast that I just explained is based on the number of shares before this share buyback. Next is the full year forecast by segment compared with the forecast announced at the previous full year results. Please turn to page 14. The blue column in the center is the revised forecast for FY2023. First, with regards to liner trade, recurring profit was revised down by 2 billion to 67 billion yen. With regards to the environment surrounding container ships, currently the transportation demand is low and there is oversupply of container shipping capacity. Therefore, spot freight rates are staying at low level. In the second quarter, compared to first quarter, the profit level shall be lower. However, after fall, we expect the inventory level in the U.S. retail sector to decline and the market will start to recover. For air cargo transportation business, as was announced, the assumption is that the sales of the entire stocks of Nippon Cargo Airlines Company to ANL Holdings is to be completed on October 1st this year. And also, we expect the current soft market condition to continue. Therefore, the forecast versus last forecast is down by 7 billion to ±0. Next is logistics. Versus last forecast, we expect the decline by 10.5 billion to 23 billion yen. Both the ocean and air cargo market is soft, and we expect the profit level to decline. On the other hand, in the logistics business, we expect the robust demand in the US and Europe to contribute, and we do not expect the profit level to decline in a major way. Next is bulk shipping. Versus last forecast, we revised upward by 39.5 billion yen to 141.5 billion yen. In the automotive transportation business, we expect strong demand to continue, higher than last forecast. And through optimization of vessel deployment and efficient operation of vessels versus last forecast, we expect transportation volume to increase by 70,000 cars. In dry bulk business, the recovery of economy in China is delayed than anticipation. And so we revised downward the market assumptions for second quarter and beyond. In energy business, in LNG vessels and offshore business, we expect strong performance supported by medium to long-term contract. And for VLCC and VLGC, we expect tighter than expected supply and demand conditions to continue and revised upward the market assumptions. On page 13, there is a table that compares with last year. For your information, on this page in the notes at the bottom of the slide, we explained that the calculation method for the interest amount allocated to each segment was changed. And for the sake of apple-to-apple comparison, we revised the previous year's recurring profit numbers, reflecting the new calculation method. The main change is the small decline in the cost of other segment, and in response, each business segment profit declined by a small amount. And there is no impact to the total number and to the total revenue. That was the explanation of the full year forecast for FY2023. In the presentation material published in the homepage, there are additional pages in the appendix which covers information on the assumptions of each business segment and other reference materials. Please refer to those slides as well. This concludes my explanation. Thank you very much for your attention.
Thank you very much. Next, we would like to go to a question and answer session. Thank you. Can you hear me? Yes, we can. I have two questions. So this time round, the revision against your plan. So I would like to ask about your assumptions that you have used. For instance, for the book shipping business, the first quarter, rather than first quarter, the second quarter, the profit is going to decline. And in terms of the season, the dry bulk, the second half, the market will improve. So the profit going being lower than the first half, I just want to question about the assumption. And in the same vein, in terms of the logistics business, in the first half, rather than the first half, the second half has to be the peak of the demand, and I think the profit should increase, but it is not reflected to the plan. So I was just wondering what type of assumptions that you are using. My second question is that in the midterm plan, so trying to control your capital, what the initiatives you're taking in the midterm plan in terms of the 200 billion of share buybacks. You have made that announcement. So in terms of the including the off balance, improving the shareholders' equity 1.50%, how this is going to progress. So the plan has been slightly revised upwards, but against the plan, if the more the profit is over the plan, it means that the capital will increase as well. So it means that you will have to go forward in those initiatives. So I would like to hear about your initiatives against this. Thank you for your question. First, to your first question about the assumptions that we're using for a revised plan for the bulk shipping and for the logistics business, the question was that compared to the first half, the second half profit level is lower. And the background or the assumptions we're using, I understand the questioning about that. In terms of the bulk shipping business, so currently, so for tankers and VLGCs, currently we are being able to enjoy a high level, so $70,000, $80,000. We're at a high level, but in the, going forward, I think if you look at the appendix, I think you'll be able to understand. But as you can see there in the appendix, going forward, we think that the market is going to decline. So that is the reason we reflected in our assumptions. In terms of the automotive transportation vessels, as we have said, overall, against our initial outlook, in terms of the volume has gone up. But going forward, the cost, because we have to renew some of our chartered vessels, so the cost will be going up a bit. So for the bulk shipping business overall, that will lead to the difference of the profit between the first half and the second half. In terms of the logistics business, Mr. Banno will answer your question. Thank you for your question. In terms of the logistic business, why does the second half be worse than the first half? I think the general consensus is the second half will be better than the first half. Oh, that's true. In terms of volume, it will gradually improve, and the second half volume-wise, it will improve. Well, before that, Mr. Kono said that the contract logistics, which is focusing on warehousing, is basically the same whether it be the first half or the second half. The forwarding business, air and ocean forwarding business, is where the difference is. For these businesses, in terms of the procurement price from the beginning of the year, we have started to decline. But in terms of the rates that we have been receiving from the customers, there is a lag in terms of how this is reflected. So because of this, the margins was higher, was better. That was the background. But the rate has started to become closer to the procurement cost, meaning that the margins that we'll be able to get will be lower. So that will be more pronounced in the second half rather than in the first half. So in terms of the revenue, it's going to grow, but in terms of the profit, it's going to decline. And a follow-up to your second question, in terms of the adjustment for the shareholders' equity, so 200 billion of share buybacks as a result for the full year, at the end of the full year, in terms of the forecast of the balance sheet for each of the indices. That was your question. As we have been saying, for this fiscal year's profit forecast is 20 billion. So in terms of the, even after we cover our own shares, and of course we pay out dividends, if you reflect that, it means that the shareholders' equity ratio on the balance sheet, these type of indices will not be a larger level of leverage. I do not think that it's going to be the case. But that said, we have to strike a balance between our investment plans. Currently, in our midterm management plan, we have a investment plans as well. According to my understanding, the investment plans are going forward very smoothly. But the speed, depending on the speed of the progress in the single year, maybe the cash flow on the investment, cash flow related to investment will change on the balance sheet. So, reflecting this, I think the next year onwards figures or numbers will be decided. So in that sense, through this, the debt equity ratio, the shareholders equity ratio, against the initial plan, or in terms of the adjustment that we want to make in terms of shareholder equity, of course, it will progress, but it will all depend on how much investment or the progress of the investment that we're going to make. So in terms of the logistics business, so is there a delay in terms of the payment of procurement, in terms of the freight situation? I think you have already known about that from April or May. So is there any major change in the market condition in the last 2 months, if you're going to revise your outlook downwards? In terms of the shareholder equity reduction, yes, I think I understand that you have a plan, but to be able to achieve this means that in terms of the capital reduction, I think you have to invest in any case. And so is it basically you will do that according to your formula? You're going to stick to your formula. Is that what you're saying? Well, let me first talk about the situation of logistics. Well, 3 months ago, and comparing right now, the situation hasn't changed that much. But the major element here is that the freight rates decline has been larger than we have estimated, especially for air forwarding business. The freights there. Well, the market overall is declining, but what we are dealing with, there are maybe less of the shipment or what we are handling. So we have started to see that in May. So that is the reason why the profit has declined. And going to your second question, let me explain about that. As you have pointed out, basically, we are progressing according to a midterm plan. So 200 billion of share buybacks within our midterm plan. It will be a 2-year time frame, but we are doing this front-loaded that for this year. But there is a timing difference, but the numbers already reflects that. And on top of that, in the midterm plan, about 140 billion management allocation is included, and that will be according to the progress of the investment plan or the other changes in the profit plan, including additional return. We'll be utilizing that very flexibly. And so basically, that scenario hasn't changed. So as I've said, so investment and this we have conducted a provision of 20 billion, and based on the numbers that has been put out, by the end of this fiscal year, we will consider about the capital plan from next fiscal year onwards. That is basically in line with what we have anticipated within our midterm plan. Thank you. Understood.
Thank you very much for your question. We would like to entertain the next question. I have two questions. First question is regarding the bulk business, the bulk shipping business. What are the factors for revising upward the profit plan per business? What is the largest contributor to the upward revision, or any business area where you reduce the profit plan? That is the first question. Second question is regarding your cash position. As of the end of June, the cash on the balance sheet is 220 billion yen, and the share buyback funding will likely to be covered by the funding plan. Am I correct? And from medium to long-term working capital, what would be the right level of cash to be held? Those are the two main questions. Thank you for your question. Regarding your first point, the breakdown of bulk shipping, strong areas and weaker areas. Well, as I have explained, the automotive vessels and energy, VLCC and VLGC in particular, they outperformed our assumptions. On the other hand, dry bulk was more or less in line with our expectations. For dry, second half onward, we do expect deceleration of the market. The assumption is revised downward from our initial assumption. So for the full year, that will be the factor for negative contribution. For automotive and energy, the number of transported cars, that contribution is larger. With regards to the cash position, as you have pointed out, this time 200 billion yen share buyback will be executed, and in addition to cash at hand, we fund using debts such as transition bond issuance. We did issue recently, and along with the progression of the investment plan, we will cover with the fundraising as well through debt. The current 220 billion cash position, we do feel that it is slightly larger than optimum, so we will likely to make some adjustments going forward. That was my reply. Thank you. I have one additional question as a follow-up. For bulk shipping business, the FX assumption is changed by only 2 yen on annual basis. So am I correct to assume that exchange rate assumption change impact is not significant? Second half assumption is 130 yen to the dollar, so this is unchanged. In the first half, we factored in the current rate to a certain extent, so the impact is relatively small. In the first quarter, we explained on the material, which page was it? It's on page 8. In the first quarter, it is 135 yen, so the change is 5 yen. Versus last quarter, it says 3 billion yen. The assumption is weaker yen by 5 yen. Second quarter onward, the FX impact amount for this, well, revenue and each business revenue is being reviewed once again, and slightly the sensitivity has risen compared to the previous assumption. The initial assumption was 1.16 billion yen per yen, but the current sensitivity assumption is 1.24 billion yen per 1 yen fluctuation. I understood fully. Thank you very much.
Thank you for your question. Going to the next question. So this is an overlap with the previous person, but more than assumed profit and cash, if that is generated, if more than accepted profit is generated, I would like to talk about the optimization of capital and the return policy. So the upward revision this time, the additional return that you have announced with the increased dividends or 200 billion of share buybacks, is that basically the all that you're going to do in terms of the enhanced return going forward? For instance, if the profit is better through the weaker yen, maybe through the ONE additional dividends coming from ONE, if that happens, is there a newly additional return that you're going to conduct to the shareholders? What is the timing or the methodology? So is it just basically increase the dividend based on the 30% or the payout ratio or some rule of the dividend payment policy? If you have any ideas in terms of how are you going to if you're going to do some additional returns and how are you going to do that? Thank you very much for your question. Going to your first question. So this time, the additional return, well, in terms of the increase of the dividend, so this is due to the revised revision. So 220 billion of the net income is the outlook. So based on the 30% payout ratio target that we have, in line with that, we are forecasting or have decided to increase our dividend. Going forward, so we are not, forecasting a downward revision, but if it's an upward move, then 30% of payout ratio is our target starting from this fiscal year. I think in terms of returns, we'll consider that looking at that target. So this 200 billion of share buybacks, this is based on the midterm plan, and from the beginning, we have been explaining about that, and it's just that the timing has been front-loaded. And going forward, in terms of our shareholder return policy or the methodology that we're going to take, we have not decided definitely for maybe more than 30% of the payout ratio going to 35%. We have not discussed about that currently. But this 30% will be a type of the criteria, and that will be our dividend policy will be based on this 30%. For the additional return to our shareholders, I think what you are asking is that further share buybacks, whether that it's going to do that or not. I think that's the gist of your question. In the midterm plan, we have explained that the 140 billion of management allocation will be there. On top of that, based on our future investment plans, if there is additional profit that we're going to generate this fiscal year, we'll take a comprehensive view and then discuss what we want to do with that. So whether it's going to be through share buybacks or is it going to be through additional payment of our dividends, currently it's not decided, but further share buybacks. So what we are doing right now is not the end. As a possibility, there is a possibility that we're going to do further share buybacks. That's all from me.
Thank you for your question. I would like to assign the person who raised the hand. With regards to container shipping, what is the situation? For April to June period, on a monthly basis, what is the P&L? There are former contracts which contributed to profit. And what is the status of that? And from July to September period, what would be the rates, spot freight rates that make up the business? If you could share that with us. Thank you for the question. On this question, Mr. Banno will reply. Thank you for the question. With regards to the market trend, from the beginning of the year, the level has gradually come down. In June, we see that the bottom has been hit, and then the trend started to rise since that time. With regards to the container ship P&L, there's some time gap to reflect the market trend. From first quarter to early second quarter, first half of the second quarter, deterioration continues, and then recovery will start. Especially in April, last fiscal year's high rate contract still existed, remained. So we were able to generate quite a large profit. And that led to the first quarter result. And second quarter results, a lot of adjustments are being already done. And that is reflected in the second quarter. The reason for deterioration. Those are the assumptions. Currently, I think you are aware that from mid-July or second half of July to August, the spot rates are recovering gradually. So, depending on the trend, there may be potential for overshoot. But we need to remain vigilant. That was my reply. Understood. Additional question. The freight rate assumption for the second half, currently the spot is rising, and once that has stabilized, then you will be able to generate more profit. What is the assumption of the freight rates? The freight rates and the volume, both are the factors, and for the volumes, we are making adjustments on the vessel capacity to maintain high capacity utilization rate. But still, there is a sufficient capacity. We do not expect a rapid increase. But compared to 3 months ago, we made some downward revision, but currently we expect the volume will increase. On the other hand, on the rate side, currently it is rising slightly. In the future, for a certain period of time, we do assume the rates will further rise a little bit. In the beginning of the year, it comes down again. There is such seasonality. So that is our assumption. Understood. Thank you very much.
Thank you for your question. Let's go to the next question. There's a question via chat. This is about shareholder return. I will read it up. With the share buyback, the number of shares is going to decrease substantially. So 100 yen will be the minimum level. Why are you continuing to pay this dividend? So this time around, in terms of a dividend payment, as I have said in the previous explanation, the we haven't reflected the decline in the number of shares through the share buybacks because we don't know how many shares we're going to be able to buy back, what timing this is going to happen. So in terms of the term average number of shares, what it's going to be, it's very difficult for us to make a rational assumption. So the 10 yen is not reflected in the 10 yen increase of a dividend. So including the minimum level of 100 yen, so our target would be 30% of the PER ratio. At the end of the fiscal year, we will look at the average number of shares during the fiscal year and how far the share buyback has been progressing. And I think ultimately we'll look at these situations and decide about our dividend. In this context, how much number of shares is going to decline, depending on the number, maybe we will review the minimum full year dividend payment. That is possible, but as of now, it's difficult for us to make a forecast, so it's not included in our dividend payment prediction. Thank you.
We are still accepting questions. Please either raise your hand or write your question in the chat. Please go ahead. I would like to make an additional question. The assessment of the first quarter with regards to the progress of profit, how was this been assessed? The ordinary profit is up by 20 billion, and first quarter is assessed to be in line or positively assessed. Thank you for the question. Basically, you are correct. First half, especially in the first quarter, the performance was higher than our assumptions in some areas. As I have been explaining, at ONE, the contract from last period before renewal contributed, and in dry bulk, currently market is slightly down, but
we have been able to enjoy the higher level of rates. So on top of that, the market itself has been continuously been able to not a kind of a one-off on the first quarter, but the second quarter onwards, we think that the automotive car transportation business is going to be strong, but the tankers, VLCC, VLGC is strong. So these were the factors. That's the reason why the first quarter we have been able to show a good result in that sense. Of course, there's some ups and downs, but for the second half, the positive elements will be able to offset the drop of the liner and logistics segment. And so now, that's the reason why we have not changed the full year outlook that we have announced at the beginning of the year. So that's all from me. Thank you. Thank you for your question. So there seems to be no further questions. It's earlier than planned, but with this, we'd like to end the Q&A session. Thank you. First quarter earnings briefing for the fiscal year 2023. Thank you very much for your participation. Thank you.